So very good morning to all of you, and it's a Sunday morning too. So generally Sunday is supposed to be a rest day, but as far as we chartered accountants are concerned, till we complete our studies, till we clear it, it's all there are no Sundays, there are no holidays. So it's all about preparation for your examination. So with that note, we will continue with what we left in the last class. So what exactly did we do in the last class? We tried solving the problem as a whole. So when you say whole, we said it includes all heads of income. It includes deduction. So all of them put together, you compute your total income, you compute your tax payable. And in fact, we studied about two other tax provisions, which is about this 115 BAC and the alternate minimum tax. So these two also we studied. So as far as this 115 BAC, we discussed about what is the slab, what needs to be foregone, what needs to be what is generally not allowed when you prefer this 115 BAC. We saw that also. And then we also understood about this alternate minimum tax, which is 18.5% on adjusted total gross total income. So this adjusted total income on which we apply 18.5%. So this also we covered last class. But we started with a couple of problems trying to understand how exactly this works. So that's how it works. So we'll continue with that model. So we'll start with the other problems. So the exercise 4 of your study material. So before that, I'll just, Akash is refund of income tax and income from other sources. Okay. We'll put it this way, okay? There are two components to income tax refund. So in that income tax refund, the one is the tax itself. So one is the tax itself. So that tax, whatever you're talking, includes what? So that tax, whatever you're talking, includes, I'm sorry, So the tax that you're actually talking includes two components. We said refund, right? So refund includes two components. One is your tax itself. The income tax. The other is the interest component. So typically when the income tax refunds you, they pay an interest at 0.5% per month. So that interest, this interest component is income from other sources. So this interest component alone is the income from other sources. The income tax is not. So this is not an income. So we'll put it. So this is not an income. So, but whereas the interest component is income from other sources. So hope I've clarified, Akash. So we'll move on to the problem, like the fourth problem, but which we are talking about. So what does this fourth problem say? It says Mr. Y is carrying on his own business. Okay. So again, see, when you wanted to talk about this computation as whole problem, so we have earlier seen computing salary alone. So there will be a detailed salary problem where it will be tested with house rent allowance, gratuity, pension, leave travel allowance. So all this will be tested in same question, the salary component, right? When we speak about business, there will be several things, like your what are eligible expenditure, what is not allowed. So you put all this together and compute business or profession. But when it comes to this computation, independent adjustment on the set will be very little. For example, there might be salary income, but the adjustment on salary will be very less. Same way business. So if you actually see, it is all heads of income combined together. So each head of income will have few adjustments to what you need to do in order to arrive at the income of that particular head alone. So that's what you basically needs to do. Okay. So now, with respect to this, whatever we have been talking as your what you call your computation in this exam or in any of the examination that we are talking about, as far as your intermediate is concerned, this is how the structure of question will look. So you'll be given a profit and loss account. So this profit and loss account will not only have your business income. If you actually just think of it, who will prepare a profit and loss account? Only one who has a business income. The rest of them, for example, one who's only earning salary income, only who's earning interest income, will they have a profit and loss account? Not necessarily, right? They might not have it. So when your question talks about profit and relevant contents, It only means that you need to split each heads of income out of P&L and then compute business alone, then compute each heads differently, independently. So that's what we saw in question number 3 also. So please understand, if you see a P&L, you're going to have all the income reported in P&L. Your P&L will have business income, house property income, other sources, everything will be there in that P&L. So you're going to remove, you're going to reclassify, you're going to just limit to whatever is business for the purpose of P&L. Rest of the thing, you're going to bring it to different classification, calculated independently. Salary, house property, each of them will be calculated independently. So that's what we are actually understanding from this. So we'll start with this. So we said Y is carrying on business. So what did we say? A thumb rule of how do you prepare? We said we need to read, prepare, solve. So these are 3 steps in preparing, solving a particular question in your examination. Please understand, there is a reason why I'm stressing this, because when you read, while reading, you prepare yourself. We spoke about a small mark, probably with your pencil, to say that what you need to do. Should you reduce it from P&L? Should you add it? What should you exactly do? And when you're actually doing it, you probably strike that off so that you know that you have completed that step in your problem. So this small step will help you avoid errors, avoid any mistakes that could happen without your knowledge. So you might be knowing the portion, but you might have missed it applying at that point in time because you missed reading that, or you read that and forgot to fill it up in the solution. So that's what I'm stressing of this concept of read, prepare, and solve. Okay, so now we are going to read. In the same time, we are also going to prepare. So I said, while reading, you need to identify keywords. Some words are irrelevant, some words are relevant. So whatever words are relevant, you try to capture that and see that. So when you're reading the word, you should think of the provision that relates to. So that's what we are going to see now. So he has a trading business. So typically he has a trading business. Is that important? Is that important? If you ask me, it is important. Why? Because the additional depreciation in business or profession is restricted to manufacturing business. It's not for trading business. So if the word question provides manufacturing business, and if there is any asset that has plant and machinery, you need to provide for additional depreciation. But if it is trading, it is not about your it's not relevant about your additional depreciation. So it's not relevant. So okay. Next, 31st March 2022. That's the year we are going to work. So that's straightforward. And they've given you a net profit. And the next line they're saying following incomes were credited in the P&L account. So which means the incomes that are actually credited in the P&L account should only relate to your business income. If it's something else, you're going to reclassify. So the one is dividend, interest, winning from outsources. So all 3, what should you do? All 3, you need to remove it from your business or profession and bring it into other sources. So what we are going to do, we are first going to remove. So all this 3 needs to be removed, correct? So removed from your profit and loss account. So it's not an income belonging to business. So you're removing. So then what should I do? I should include it in other sources. So I can write OS or whatever code word you feel is right. So whatever code word you feel it is right, you can always write. And then there's one more step. What? When it's a dividend, the word used here is gross, correct? So when you say gross, that is your income. But it would have had an impact of TDS. So we need to take TDS into credit. In case if the question demands calculate tax. So we'll go to the end of the question first to understand and then come back. I'm not skipping anything, just to understand my objective. For this solution, what is my objective? It is only income or also tax payable, because if it includes tax payable, I need to do one more addition here. So I'm just going to understand what is the exempt. So compute total income, which means we need not calculate tax. So there is no requirement of finding TDS. So you can stay happy, relaxed, that you need not know the TDS provision for this question, right? And I'll also give you another tip. Whenever it is about this kind of question, the TDS that you'll be tested are these section. Okay, I'll just write it. So you'll be tested with 194, which is your dividend on equity, that is your, let's say, shares, and you have 194K, that is your mutual fund and others. So this is also like, we can call it as like dividend. Okay, we'll call it as like dividend. So it is typically what you receive from mutual fund and other things. So these are the two sections that will be tested. Another thing is this, winning from horse races. So that's also important. So typically winning from horse races, it's subject to 30% tax. So 30% tax is the tax rate for this. TDS is also 30%. So that is also relevant. So these are the three things that you actually remember from this particular provision. Okay. So we'll move on to against the question. So I'm not going to add the TDS adjustment because it does not include tax payable. In the earlier question, the third exercise when we saw, it also included what? It also included your computing tax. So we need to adjust TDS. Here we are not going to do that. Next, it was found that some stocks were omitted to be included in both opening and closing stock. Just imagine your P&L. Just go back to your 11th standard and 12th standard accounts. Where will this opening stock appear in your trading P&L account? It will appear on the debit side. Where will your closing stock appear? It will appear on the credit side. So this opening stock is like an expenditure. Closing stock is like an income. Opening stock is like an expenditure. Closing stock is an income. More the opening stock, your profit goes down. More the closing stock, your profit goes up, because opening stock is like an expenditure, closing stock is like an income. I'm using the word like because just to remembering, I'm just telling you this shortcut. Opening stock is like expenditure, closing stock like an income. So now opening stock is undervalued. That is, it is omitted, right? So it's not part of your opening stock. Now I need to include 8,000. I need to include 8,000 as part of my expenditure. So what will it, how will it impact my profit? If I'm adding 8,000 as expenditure, what will happen to my profit? My profit will go down, and this is not part of P&L, which means I'm going to additionally include it. So I need to reduce opening stock. So I'll call it as opening stock needs to be reduced. Closing stock needs to be added. So I'll also put a plus. So opening stock needs to be reduced. Closing stock needs to be added to increase my income by 8,000 and 12,000 respectively. So I'll reduce my income by 8,000. I'll increase my income by 12,000. So that is what I'm going to do. So that is about opening stock and closing stock. Okay. Next, 1 lakh was debited to profit and loss account, being contribution to a university approved and notified under section 35(1). Scientific research. Now, for current year, for whatever you are preparing, the maximum scientific research allowed is 100%. Earlier, there are weighted deduction. Like instead of 100, you can claim 125% expenditure. This was earlier. But what is relevant for our examination, the November 22, that which we are going to write, the provision remains 100% of scientific research. One could be for your own business. One could be for a third party, that is another company, and then approved institutions and organizations. So this university, which is notified under 35(1)(2), which means it has been an approved institution for which they are giving. So 100% is allowed. Already this 100%, the expenditure is debited to P&L. So I need not do anything. So I'm just going to leave it as it is. If required, or recommended is a note to say that I need not do anything to this. I'll say that I need not do anything to this, and I'll write a note. So N stands for note. Salary includes the one in P&L. The salary part of P&L includes 20,000 paid to his brother. Why is this relevant? Brother, it's a key word. It's a word that is relevant. When you say something is paid to brother, who's brother to you? Is a relative. So when you are paying to relative, what is important? It must be paid at the fair value. Whatever is actually in the market needs to be paid. So if 20,000 is the right expenditure, it is okay. But the question says it is unreasonable to the extent of 2,500. Don't ask me how it is found out. That is never part of your syllabus or something. So as far as the examination concerned, they will give you this amount, which is unreasonable. So when something is unreasonable to an expenditure, part of expenditure paid to a related party, we need to disallow that. We need to disallow that, which means it is not an eligible expenditure. So I'm going to increase my profits. So I'm going to add. We said two adjustments, right? We said two. What two? Two additions, two deductions. Two for income, two for expenditure. So that's why we said it's what is called two things that you need to reduce, two things that you need to add, two for income, two for expenses. That's where two comes into picture. So that's what you're going to do. So now you're going to add it because it's not an allowed expenditure under section 48(2)(b). So 48(2)(b) provides you who are all called as related party. And if something is unreasonable, it should be disallowed. So this 2,500 needs to be disallowed from your computation. Advertisements include 15 packets of dry fruits, costing per packet presented to important customer. Now, there has been a gift provided to important customers, that is for 15 customers at rupees 1,000 each. So it is typically 15 into 1,000. 15,000 has been included and is already part of advertisement expense. The word is include. So it says include, which means it's already part. Now, what should I do? Is it an eligible expenditure? Not eligible expenditure. Advertisement is an eligible expenditure. So whatever you're doing is allowed. Only things if it is something like samples given to a doctor, samples or some gifts offered to doctors, then we read that it is not allowed under the profession law of this medical profession. Some similar way what we have ethics of Institute of Chartered Accountants. So similarly, there are rules for medical profession also, whereby they say you're not supposed to receive any sample, anything as gift from any other person. So here, that is illegal. That is not allowed under the law. Hence, not okay. But here, it is a normal advertisement expenditure. You give some gift to customer, so it is okay. So this, again, you can write a note alone. So whatever you're doing, you can write a note. Total expense on car was 78,000. The car was used for both personal and official purposes. They have computed 75% for business purpose. So what should I do for the other 25%? What should I do for the other 25%? It's not my expenditure. So I need to add. I need to increase my profit. So I need to add. I need to disallow. Miscellaneous expense include 30,000 paid to A and Co. Good, let them pay. But what is it? He is a good transport operator. Is this word relevant? Goods transport operator. Goods transport operator. So we need to see whether this word is relevant or not. Now they are saying it is paid in cash. It is paid in cash. So what provision comes to your mind? 40A. Clause 3, which says if a payment is made more than 10,000, then it is not an allowed expenditure. But there are some exceptions for which they can pay any amount of cash to certain people. But with respect to this transport operator, the logistics provider, there is a limit. It's increased to 30,000. So up to whatever is being paid, the 30,000 paid here is allowed being a goods transport operator. So what should I write? I should write a note. I need not reduce, I need not add, but I should write a note. So N. Depreciation debited in the books was 55,000. Depreciation allowed as per income tax rules is 50,000. So I need to disallow the depreciation provided in the books, allow the depreciation provided in the income tax act. So what should I do? I should first add and then I should reduce. I should first add and then reduce the income tax depreciations. Drawings accounted for 10,000. Now, the question is this drawing booked in your P&L? If drawing is booked in your P&L, it is not an allowed expenditure. Why? Because your drawing of 10,000 is not allowable because it is personal. It must be forming part of your balance sheet only, and moreover, it is personal in nature. So the drawings booked in your P&L is not an allowed expenditure. So what should I do? It is not an allowed expenditure, so I add. 15,000 was debited in the profit and loss account for investment in NSC. So I need to include it as part of, it is debited to P&L. It is not part of P&L. It should come part of Chapter 6A deductions. So whatever I'm doing, I will reduce it. I will have to add it to your thing and then finally consider it as part of my NSE in chapter 6A. So this 15,000 will be claimed. So first, what should I do? I should add, because it is debited in P&L account. Then I should consider it as what? I should consider it as deduction. Chapter 6A deduction. So I need to add, then consider it as a deduction. This is what I do. So now, how should I compute? They say that you can ignore 115 BAC provisions because he has not opted to pay tax. So now what we need to do is we need to calculate it in the regular provision. So can we start this problem? So you now, what have we completed? We have now completed. Now we have completed the reading part. So we have completed reading part. We have completed preparing part. So now it's time to solve the problem. So as I told you, initially it might look like you are taking so much of time to do this exercise, but trust me, as time goes, as you keep preparing, as you solve more problems, it will like be nothing. It'll hardly take very few minutes to do this exercise, but it matters the most. Why? Because it helps you in missing certain things, making errors. So it helps you in doing this. So it also helps you in understanding the number of line items that you're going to solve with respect to this problem. So can we start this problem now? So we'll start with the computation. So what exactly it is? It is computation of Y, right? His name is, yeah. So computation of Mr. Y. Computation of Mr. Y for, I'll have to write computation of total income. Sorry. So computation of total income of Mr. Y for assessment year 22-23, right? So that's what we need to do. So we said there are two ways of doing it. One is making the relevant adjustments here itself, that is in the your original solution itself, or put it as a note, as a schedule. So we can do it both ways. I generally recommend the second approach, keeping it as a separate schedule, so that your first part of it clear, you know what exactly you are going to write. For example, currently you have only two heads of income, that is profit and gains, that is PGBP, and then IFO. So these are the two heads, and then you have deduction. So you know what exactly you're going to do. So what you can do is, it will be particulars, okay, and then I'll have an amount column. Since I'm going to do everything in the note, in this particular thing, it is okay. I have one amount column, that is perfectly fine. So then I'll have to have a reference tab. So this is what I need to do. So we'll just first write so that we know the space. So it will typically be like, I need to write profit and gains from business or profession. So note 1. Then income from other sources is in working 2. And then you have what? You get your gross total income. These are the only two that you add. So you have gross total income. Then what do you have? Less deductions under chapter 6A. Chapter 6A. So that's what it is about. Then you have your net total income. So that is nothing but your net total income. You can also write it as rounded off. Okay, so you can have this. So this is the what you call, this is the space that you're required. So you need not wait. You can just write the entire thing, fill up the numbers later point in time, so that I'm not going to miss one single bit of it. So that's the intention of it. So now I create the column accordingly. So I have an amount column, and then I have a reference column. So then I have particulars column, correct? Okay. So I will put here. So that's how you do it. Okay, so now I'll also do this particulars here. Okay, right. So now we'll start with notes. So that's the most important. In fact, that's the answer, right? So that's the answer. So now we are going to write notes. One, in profits and gains from business or profession, correct? Business or profession. So what should I start? Again, I should have particulars. Here, I can have two columns, two amount columns, so that it helps me to have an inner column total. And then, of course, I should have a reference column. So that's what it is about. So then we start here. So where do we start? The first thing that we need to do is we need to understand what is the net profit. So that's where you start. So generally, when you say this net profit, it is typically before taxation. So if your profit says income tax has been recorded, tax paid has been recorded, that's not allowed because your whatever you're calculating should be before tax. So if your question, the P&L or the information provided informs you that tax has been included, that needs to be excluded, that needs to be disallowed. So, but here it did not have anything about it. So I'll start with net profit. Net profit. So how much was net profit? 11,20,000. So I write in the outer column 11,20,000. Now we said there needs to be four things. You need to two for income, two for expenditure. So we'll start with reducing less income considered under other heads. Okay. So what are the three things that are there? Dividend, interest on debenture, and winning from horse races. So dividend, income from, sorry, what is it? Debenture, right? So I'll put it as just debenture interest. Okay, and then you have what? You add winning from horse races. So horse races. So what is the total? So you have three numbers: 22, 17,500, and 15,000. 22,000, 17,500, and 15,000. So this will give a total of what? 39,500, 49,500, 54,500. So this needs to be reduced. In fact, there is one another reduction that needs to be done on income, but it is just that relating to your what you call. We also need to do this opening stock and closing stock. We need to just keep that in mind. So for time being, we have completed all the three considered separately. The next item that we are going to do is add any income that needs to be included. So now we say there is only one line item, the closing stock, that has been not allowed. So that's the only thing. So you can say closing stock omitted. So that omitted is what, 12,000, right? Yeah, it is 12,000. So sorry, I've not brought the total. So that is 1120 minus 54,500. So it is 1065,500. And then you have closing stock omitted. That is what, 12,000, right? That can straightly come here because there is only one line item. So in this, you bring out how much? So if you add this, it will be 10,77,500. Okay. So moving on, so I have now completed this addition. So now I need to see what else needs to be done. So that is relating to your expenditure and thing, expenditures that needs to be adjusted. So now we're going to start with expenditures disallowed. So we'll start with add expenditure disallowed. So that's the thing. So in these extend these things. Okay. So now what are the expenditure? The first one that we need to add here is, you have said salary includes the brother. Salary include the brother. This needs to be added. So that's the first thing in addition. So I say salary. If you want, you can actually calculate this also. How many items you need to reduce. So now if you actually go to this question, you will understand the things that you need to add. The expenditure disallowed is one. So this is one. This is two. So one, two, and then you have what? The drawings is three, and then you have this 15,000. So you have four items that needs to be added. You can actually do that also. And then another thing that you need to do is depreciation, right? Yeah, one, two, this one, three. So one, two, three, four, and five items that you need to do. So you can actually have line item of five and then go to the next item if you want to do. So you can do that also. So we'll start with one. So that is salary to brother. Salary to brother. And then it is 2,500, right? 2,500. The note thing you can write directly as a note, so you need not actually write a line item and note here. So you can obviously write notes for others, the advertisement and other things. We can straight away write a note, and then you have personal expenditure. Personal expenditure car. Okay, so you have that. How much it is? 25% of 78,000, right? So out of 78,000, you calculate 28%, which is nothing but 19,500. So I've done this. I've done this. Next is this is only a note, the goods transport operator. Next is depreciation, drawings, and NSC. So depreciation per books, 55,000, right? 50, yeah, 55,000. So I've done this also. Next is drawings. Then you have NSC. So drawings is 10,000. NSC is 15,000. So what I do, I include this. So now I need to calculate how much totally comes. So it is 2,500 plus 19,500 plus 55,000 plus 25,000. So it is 1,02,000. So what happens? I need to add from here. So it will become 11,79,500. Okay. So that is addition. Next is less expenditure. Less expenditure allowed. Okay. So here the first thing is opening stock. We had an adjustment for opening stock. So we'll go. So now you have completed NSC drawing. So strike off everything. So now what else is left? The reduction thing. So there is the reduction in expenditure. So the one you have opening stock, Another thing is you have this income tax depreciation. So two things to be reduced: opening stock and depreciation act. So opening stock was 8,000, right? 8,000. Depreciation, I guess, was 50. We just reconfirm. Yeah. So this 50 is included. The 8,000 is also included. So you have covered both. So what do you get? You get 58,000. So 11,79,500 minus 58,000. So that will be 11 lakh 21, right? 21,500. 11,21,500. I'm right. So 11,21,500 is what you get after your this. So in this, you have to reduce your. So there is no other adjustments to do with respect to business or profession. So this is what we're actually calling as a total business or profession. Okay, so we'll call it as income. So this will be carried over to this set. Next, we can compute income from other sources. So we have to write note, right? So we'll call it as 2.1. 2.1, you say that this advertisement expenditure is allowed. You write about this advertisement expense. So what do you say? Advertisement expense is wholly for business purpose. Sorry for the handwriting again. I keep telling this every time. I'm sorry. For business purposes. So it's wholly and exclusively for business purpose. It is also allowed under the laws. Allowed under the laws. Hence, and what do you call hence and eligible expenditure under section 37. So it's an eligible expenditure under section 37. Okay. Next is we were talking about this 40A3, right? So there, section 40A3 provides disallowance on cash expenditure, or we can say expenditure made in cash, expenditure made in cash for more than rupees 10,000 per person in a day. However, the limit for goods transporter is rupees 35,000. Rupees 35,000. Considering that the payment was rupees 30,000, no disallowance is warranted under section 40A3. So right, 40A3. So that's what it is. So these two things we can consider. Okay. So that's what it is about. So we have considered the note also. So I'll just see where else we have to write note. Yeah, you have not write about scientific research. Yeah, you can write that also. Scientific research expenditure is already provided in the book, hence um, no adjustment is required. So I've done this note. What other note? Yeah, I've written notes for this. Depreciation, yeah, we have written a note for advertisement. Yeah, note. Yeah. So 3 notes we have computed. So that's it about. Now we have to write about what income from other sources. So the next annexure, actually this is note 1, right? So we can write as 1.1, 1.2, 1.3. So next is 2. 2 is income from other sources. So what do you do? Particular amount. So particulars is dividend, interest, and what was next one? Interest. 3 things, right? Dividend, interest, and winning from horse races. Yeah. So horse race. This is 15, 17,500 and 22. 22 and 17,500. So 39,500, 49, 54,500. So you bring that 54,500. You get the gross total income. So gross total income will be 11 lakh 75,500. So deduction under chapter 6A, you can write it as note 3, 15,000 as NSC. So it will be 11 lakh 6,500. And interestingly, it need not be rounded off. So you can just write 11,60,500. Okay. So there is no rounding off. So that column is not required. So this rounding off is there. So this 11,60,500 becomes your total income. So that's what it is about. So in total, what you get? Just a second. 500 and 500. Okay, I've done a small mistake here. So it becomes, there is 11,21,500 plus 54,500. So I've just put it as 54. So it is typically 11,76. So here it will become 11,61, correct? So this rounding off is typically not required. We will just leave it. Rounding off will not be actually required. So 1161 will be the total income for Mr. White, so on which he needs to pay tax. We forgot to write note 3, so I'll go back here. I'll just put it here itself, note 3. So note 3 is contribution to NSC. NSC is an eligible deduction under section 80C of chapter 6A. Right? So you have already considered that 15,000 there. So that's what it is about. So this is the exercise 4. So that's how you do it. So I'll just see. So yeah, many of you have participated good. So it is good. Akash, Susil, yeah, good. So and in point 4, the expense should be capitalized, so not included in profit. What is point 4? No. See, this section 35 expenditure could be revenue, could be capital. whatever it is allowed as an expenditure. 100% deduction can be claimed. When it comes to capital expenditure, it is either for your own company or a division in your company which is into research and development. So that's what. Only with respect to these two, there might be capital expenditure in which you are incurring for scientific research. If you're giving to another company or to a, let's say to another institution or something, eligible institution, these are all generally a revenue expenditure. It's like a donation. Please understand, it's like a donation. What do you do with donation? You disallow it in your profit and loss account, claim it as a deduction under section 80G to the extent it is allowed. But when it comes to scientific research, donation for scientific research to another company or an eligible institution, what provision says is under section 35, it says you can claim 100% expenditure on these three or four items. That is your own company, your company's research and development organization, to any approved institution, not to a third party company engaged in scientific research. So to these things, whatever you are incurring is eligible. So this 1 lakh which you are talking, is actually an eligible expenditure to be claimed as deduction. Since it is already debited to P&L account, we are not doing anything. To it. Rekha, can we directly reduce? Rekha and Pooja, you have questioned actually a rightful question. Instead of adding the depreciation in the books and then reducing it from the income tax side, can we straight away do the difference alone? There is no difference in doing it, but it is actually not allowed. I'll tell you why. We need to provide for the provisions in which it applies. So as far as this depreciation goes, whatever we are considering here, this depreciation is under section 32, correct? Under section 32. Now, this should be specifically provided in your computation, saying that this is the depreciation allowed under section 32. So that is what is important. So you need to specify the line item separately, independently, saying that the depreciation allowed under section 32. Since we are giving allowance to depreciation under section 32, we are disallowing whatever is already provided in the books of accounts. That's why we have a separate line item here and separate line item here. So that's what you need to do. So it must be two separate line items. You are not allowed to do. And for these things, there are one more reason also why we need to do this. We studied about a concept called unabsorbed depreciation. Okay. I'll give you a small example. Let's say my profit is 2 lakhs. Okay. My depreciation in books is 1,50,000. Okay. My depreciation per act is 2,25,000. Okay. So now this profit is after depreciation. Okay. Or I'll keep it as, for example purpose, we'll keep it as before depreciation. Okay. We'll keep it. So before depreciation, my profit is 2 lakhs. So now, so what should I do? I'll have to, so my actual profit is 2 lakhs less depreciation, 1,50,000. So my actual profit is 50,000. So in income tax, what do? You first start with profit, that is 50,000. Add depreciation per book, that is 1,50,000. So you get 2 lakhs less depreciation per act, which is 2,25,000. So there is a loss of 25,000. Okay, it's a loss. Now, the reason for this loss is what? Reason for this loss is unabsorbed depreciation. This portion becomes unabsorbed depreciation. This can be carried forward for n number of years. So what happens typically is you need to know how much is only because of depreciation. So to know that, you need to do this act independently. First, add it for the books and then reduce it from the 32. So the reason why we are doing is two things. One is you need to specifically provide how much is being claimed under section 32. That's one reason. The second reason is because of this, you might result in unabsorbed depreciation. To understand unabsorbed depreciation, we need to add this line item independently so that only then we can say how much of depreciation is unabsorbed and that can be carried forward. So that's why we need to do this. So hope Rekha and Pooja, now you understand why we need to do it independently and not as a circular. The impact does not change, but for these two reasons, we need to actually calculate it independently. Okay. So I guess that's all about exercise 4. We already solved exercise 5. So we'll move on to exercise 6. So exercise 6 is basically again, it's a P&L type item. So it's basically about Mr. Rajiv, who's aged 50 years. Rajiv, who's aged 50 years, a resident individual and practicing chartered accountant. So he's a practicing chartered accountant. He furnishes the receipts and payments account for the financial year 21-22. So as we were talking about, it includes a P&L which has all these income and other things. So we need to read, prepare, solve. So can we start reading? Yeah. So you can start reading on your own self also. It's the same exercise 6 that is there in the books of account. So whatever we are doing it right now is typically the first thing. We'll see the receipts alone. So cash and bank on 1st April 2021. Is this relevant? No. What we need is the income, right? We need the income. So nothing needs to be done for this cash and bank for the fee from professional services. So the total income is 59,38,000. That's your income. So we need to just understand that rent is 50,000. Rent is 50,000. What we are talking about an income. So what should we do? We should reduce this rent from business or profession, reduce it from business or profession, and treat it under what? House property. So reduce it from your business or profession and treat it under house property. As I keep saying, we'll just understand, is it only income? So it's only compute total income. So it does not include TDS. So we need not bother about TDS provisions. Okay. Motor car loan from Canara Bank at 9% per annum. So the motor car loan, which is there in the receipts basically, is a loan. Nothing needs to be done because you're only taking receipts and payments. So we are actually going to calculate profit. We don't have profit here because we only have the opening balance and closing balance. So we are only going to compute the profit itself. So this motor car loan should not be considered. So maybe I'll just put an into saying that this is not required for calculation of things. So I should not consider this motor car loan, but this motor car loan is also considered. So here I'll just do it as motor car loan as interest at 9% per annum. Interest is an eligible expenditure. So if it is actually not provided in your this thing, we'll have to consider that. So that will be considered as interest. So we need to provide for interest. So we can say interest alone should be reduced. It's an eligible expenditure. So that's what we need. However, the date and all has not been provided. On what date they've actually got this and all. So probably what might be there is, it might be a situation where this interest has to be considered for the whole year. So whatever interest that you're calculating should be thing. So we need to see, is there any other information on this interest on motor car? So for time being, we'll park it. Motor car loan is capital receipt. Nothing needs to be done. The interest part at 9% per annum, we need to see should anything be carried out. So that's all about the income. So the only income that we need to consider here, we'll consider this. Whatever we need to consider this is only this. So this is an income. Since we are only going to compute the profit, this needs to be an income. So I need to consider this as an income. I need not do anything to this. The house property alone, I need to include this rental and house property. Okay, now expenditure. Staff salary bonus is an allowed expenditure. So I'll say I need to reduce this as an expenditure. Other administrative expenses, I need to reduce. Please understand why I'm actually reducing it, because I'm going to compute profit. I don't have the profit and loss account. I only have receipts and payments account. So I need to compute the profit. I need to compute the profit. So I'm going to include all incomes that are eligible as an income in business, reduce all expenditure that are eligible as an expenditure with respect to this business or profession. Office rent is an eligible expenditure, so I need to reduce. Housing loan repaid to SBI. So whatever loan, housing loan has been obtained. So what is housing loan? It should be considered an house property. So it should be considered house property. Nothing needs to be done in the respect of business or profession. And then you have life insurance premium, 10% of sum assured. This should be considered where? This should be considered as deduction. So I put a D here saying that it must be considered deduction. Now, in this life insurance, there is a word called 10% of sum assured. Relevant, not relevant. Generally, your premium is allowed only on policy where your premium is 10% or less on the sum assured. So that is why the importance of 10% is there. So that's what it is. So life insurance premium is an eligible deduction because the sum assured is only 10%. The premium is only 10% of sum assured. Now, motor car is actually acquired in January 2022 only. So the loan also should be in January 2022 only. Now, this motor car, whatever is being purchased, is an asset. So you need not do anything to it, but we should claim depreciation. So I'll put it as nothing needs to be done for the capital expenditure. However, depreciation needs to be provided. So I'll put a minus. When I see this minus, I remember that depreciation has to be provided. Medical insurance is eligible for deduction. The key word is account pay check. We need to see it is there. It is also for self and wife. Books bought on 1st July is an asset. So nothing needs to be done with respect to this, but depreciation has to be provided. Computed acquired on 1st November 2021 for professional use. It is paid by check. So nothing needs to be done. Depreciation alone needs to be provided. Domestic drawings is not an eligible expenditure. So nothing needs to be done. Public Provident Fund subscription is eligible under section 80C. So it's eligible as a deduction. Motor car maintenance is eligible as a expenditure. So you can do minus. So motor car expenditure, whatever we are talking, is an eligible expenditure. Closing balance, you need not consider this. So this is not relevant here, right? So this is what we need to do. We need to calculate the income. Now we'll go to other information. He occupies the 50% of the building for own residence and let out the balance for residential use at 50,000. So this house property, whatever has been taken, is one house property. He split it into, let's say, ground floor, first floor. Ground floor is for office, first floor is for residence. I'm just saying it because it says 50%. So 50% for own residence and 15% let out. So there is one self-occupied, one let out. That's what we need to take. Motor car was put to use. So what should we do? Whatever we are doing is basically should be considered. It is now let out for 5,000 per month for the period of 10 months. So whatever we are calculating should be calculated for 10 months because the house property that he has given is 5,000. 5,000 is what per month. So typically it is 60,000. 60,000 is the total rental that you should have actually received. So that's the thing. Building was constructed during the 97-98 and house loan was taken at that time itself. So 97-98, why is this relevant? When you're calculating this housing loan interest eligibility, loans taken before 1st April 2001, the maximum housing loan interest for self-occupied property is restricted to 30,000. That's why it is important. Motor car was put to use both for official and personal purposes. 1/5 of motor car is used for personal use. So when you're actually doing the motor car here, just put a plus here for you to understand that you should not reduce the entire 10,000. You'll have to add something and only then reduce. So you'll have to reduce not 10,000, only a proportion of 10,000. That's why we are saying add here. All this marks is for your own understanding. So whatever mark I am marking is for my understanding. If D stands for deduction to me, it is deduction. If D stands for depreciation to me, it is depreciation to me. So what I'm trying to tell you is whatever mark you are making should be for your own understanding. No one else needs to understand. So you are free to do, but have a uniform approach. Across, whenever you're doing a problem, keep a same code word. OS for other sources, HP for house property, minus is for reducing, plus is for additions. So all this is what should be a common principle that you're setting in marking it. So that's what it is about. Okay. Motor car was put to use for both official. So we said this motor car now needs to be also added because some of the expenditure should be added. Um, no car loan interest was paid. Please understand, no car loan interest was paid during the year. So nothing is paid during the year to this thing. So since he is maintaining receipts and payments account, which means he follows cash accounting system. Since it is receipts and payments, the system of accounting that he is following is cash accounting. So only if you pay, you claim expenditure. So there is nothing that needs to be done for car loan interest. Written down value of assets, furniture and fitting, air conditioning, computer is given. So now we need to calculate depreciation for all these three assets. They have also given that he is following cash system of accounting. But whenever it's receipts and payments, it's supposed to be cash. So that's what it is. So Rajiv follows regularly the cash system of accounting. So that's what it is about. So we'll start right now. So we'll have to compute business income. We'll have to compute your income from house property. Then you have to calculate business income. So these are the heads of income. We also have to provide deduction. So we'll follow the same method which we followed last time. So it's basically computation of total income of Mr. Rajiv for assessment year 2022-23. So I have a particulars column. One amount in this thing, and then you have a reference column for this. So what do you do? Income from house property will be provided in note 1. Profits and gains from business or profession. So that is note 2. There is no other income, and then you have a gross total income. Plus deduction under chapter 6A. So that is 3. So next you have total income. In case if you have rounded off, you can just write rounded off. So now rounded off. Then you have reference column. Correct? So that's it. So now you have, okay. So you have what? Gross total income. Then you have total income. It's rounded off. Okay, so that's what it is all about. We have particulars here. So now we start with income from house property. So note one, income from house property. So particulars, amount reference. So what I do, there are two units, right? There are two units. So I'll write unit 1, self-occupied. So that is, we'll call it as straight away net annual value. So whatever is your net annual value. Net annual value will be nil, right? It will be 0. So whatever is there is basically nil. Less interest on loan, right? Interest on loan under section 24B. So interest on loan is basically how much is it? So it is, we can write it as a note or calculate here also. So it's typically the total interest paid was actually given. That is includes interest of 1,88,000. Please remember there is 1 lakh of principal paid. Principal paid is also an eligible deduction under ATC. So that also can be considered under ATC. So we can also write here as deduction because principal of housing property is eligible for deduction under section ATC. So housing loan interest is 88,000 divided by 2, okay, is equal to 44,000. Restricted, since purchased in 97-98, it is restricted to, so restricted to 30,000. So I put 30,000 here. So it will be 30,000 of loss, correct? Next is unit 2, let out. So let out is first, you take the gross annual value. They have not given any municipal tax or something like that. So straight away, this can also be what net annual value is. Here, the question says the rent received is 50,000. The rent received is 50,000 house property. But here it says that 5,000 per month was basically received as a rent. And let out the balance for residential use as monthly rental of 5,000 per month. So they have not given any information as to whether it is actually 50,000 or 60,000. But it's not clear, right? So it's not a clear information. If you have to take it as 50,000, might be 2 months are vacant or 2 months are not recovered or whatever it is. But since there is no clear information, you can always assume. If you think 50,000 is what needs to be considered, you can say that it is assumed that 2 months, it was let out only for 10 months. It was let out only for 10 months. So it's an assumption. Or you can say it is assumed that the whole year rent should be considered. So you can also take 60,000. In your study material, it has been considered 60,000 only as a whole year's rent, but you can always take a call. You can also take 50,000 and say that it is assumed that the rent has been it has been let out. It has been let out only for 10 months because receipts and payments talk about your what do you call receipts and payments talks about only about 50,000. It doesn't talk about your this. Sorry, I'm sorry, some issue in the scrolling. So this rent, whatever has been given here is only 50,000, right? It's only 50,000. So you can always say, see, that is 50,000 only. So I've taken 50,000 and say that it is assumed that it has been let out for 10 months only or 60. Both are correct. So now we'll go by the whatever has been considered in the your study materials. So it's basically 50,000. 50,000 less standard deduction under section 24A, interest on loan under section 24B, correct? So 50,000, 30 percentage of that 50,000, that is, sorry, 60, right? So we said we'll consider 60 itself. So as I told you, you're free to do both. You can either consider 60 or 50. Since institute material has 60,000, we'll go by that. So that is 60. 30% is 18,000. And here interest on loan is 88,000 divided by 2 is equal to 44,000. So 44,000. So the loss is So the loss is 2,000. So total will be 32,000. So this 32,000 is what is considered as your loss of house property. And next what you have is business or profession. So we need to compute business or profession. So you can write here 32,000. Next is business or profession. So 2 is PGBP, same particulars. Amount and reference. 2 amounts column, right? So amount, reference. So we have carried out here. So we'll first start with receipts. Receipts from profession. So that was the first thing that we saw. So we consider that income. So we consider this. So that is how much? So the amount is 59,38,000. Less expenses. So we'll have to calculate expenses allowed as deduction. Okay, that is allowed as deduction. So how much is it? So it's basically salary is an allowed expenditure. So I'm first reducing salary. 21,50,000. Then you have other administrative expenses. Other admin expenses. 11 lakh, right? How much is it? 1148. 11,48,000. So that's another expenditure. Then you have office rent. Office rent is 30,000. So that's also paid. And then housing loan repaid. So we said, since nothing has been paid, housing loan repaid, there's nothing allowed. So you will have to write that as a note. So maybe you can write interest. Sorry, this interest on housing loan is covered under house property. I'm sorry. So we have already covered this house property. Yeah, so we have covered those. Next, what is it about? Life insurance premium is the medical insurance, books bought on computer record, domestic fund, public provident fund, motor car maintenance. So the next expenditure is motor car maintenance. So motor car maintenance, there was another note also. So we saw that. So it was basically, it said only out of this 10,000, out of this 10,000, it is used, 1/5 was used for personal purpose. Only 4/5 should be allowed. So motor car maintenance is basically 10,000 into 4 by 5. So it is what, 8,000. So only 8,000 is allowed as an expenditure. So next, so we have covered this also. For motor car loan, there was this put to use for both official. So we'll call it as note here. So no car loan interest was paid. So motor car loan interest on car loan is basically nil, but we'll have to write a note. So since this is 2, I'll call it as 2.1. So how much is my total expenditure that we are talking? We are talking about 21,50,000 plus 11,48,000 plus 30,000 plus 38,000. Okay, so that is 33,36,000. 33,36,000 is an eligible expenditure. So what do? You say that income from business or profession is this much. Now, apart from this, we need to provide depreciation alone, right? So we'll work till this, and then we'll separately calculate the depreciation. So with this, what we get, 59,38,000 minus 33,36,000. So 26,02,000. So now we need to start with less depreciation. So depreciation, probably we can have a separate schedule below also, or work out here itself. So what are all the assets that they are actually having? The assets that already was there is furniture and fitting, plant and machinery, and computer. So that is already there. So we'll call it as furniture, fitting, plant and machinery, so we'll just extend this. Okay, so plant and machinery, computers. So we'll first calculate the existing. So for furniture and fitting is 10%, right? So 60,000 at 10%. So that is 6,000. Plant and machinery is 15%. So at 15%. So that is how much? 80,000 into 50% is 8,000 plus 4,000, right? 12,000. And then computer is at 40%. Computer is 40%. So that's how much? 50,000 into 40%. That is 20,000. Then there are new assets purchased here. So we'll go here. We'll say motor car was purchased during the year. So we'll have to go to motor car. That is, let's say plant and machinery. We'll call it as motor car new. So it is purchased for, motor car is purchased for 4,25,000. 4,25,000. And we said only 4 by 5 is for business purposes. So 4,25,000 into 4 by 5 is only should be considered into, it was purchased on January 2022. So it is only 3 months has been used. So 50%. So 50% of this is 7.5%. So that's the number. So 4,25,000 into 4 by 5 into 7.5%. So this 25,500. Next you have books. So books is also 40%. The annual publication books is basically 40%. So it is at 40%. So it is 8,000. We'll have to see what date it has been purchased. They have not given okay, they have given it as 1st July 2021. So it is whole year. Next is compute record in November. So only half is allowed. So computer new. So it is basically for computer new, it is 30,000. 30,000 into 20%. So that's what it is, right? So 6,000. So these are all the depreciation. So 20, 25, 500, 8,000, 6,000, 6,000, and 12,000. So the total depreciation is the total depreciation is 6,000, 12,000. That is 18,000. 18 plus 20 is 38. 38, 58, 63, 500, 71, 500, 77, 500. So 77, 500 is the overall depreciation. So now after adjusting depreciation from 26 lakh 2,000, right? 26 lakh 2,000 minus 77, 500. So it will be 25, 24, 500. So 25, 24, 500 will be your total business thing. So you come here, fill here, 25 lakh 24, 500. Can this house property loss be adjusted with business? Yes. So if you're adjusting this, that is 25 lakh 24, 500 minus 32,000. That will give you 24 lakh 92, 500. Then you'll have to come to depreciation. So we'll come to depreciation. Deduction. Sorry, it is not. It is a deduction. So I'll put note 3 deduction. So deduction. So first is ATC. In ATC you have a housing loan principal. I said here it is eligible. So housing loan principal 1 lakh. And then life insurance premium is 20,000. So LIC is 24,000. Then what deduction? Medical insurance is 80D. I'm sorry, I'll just keep this open. We provided depreciation, computer provided public provident fund. So PPF. So PPF is 20,000. Okay, so these are the three things. So that will give you 1,44,000. Then 80D. 80D is there is a medical insurance premium, which is all this is done. Medical insurance premium is 18,000. So 18,000 is allowed because it is allowed up to 25,000 for a non-senior citizen for self. For parents, another 25,000. If you're a senior citizen, it is 50,000 for self. If parents are senior citizen, it is 50,000 for parents. So it is basically 25 and 50,000. So now I'm eligible for total thing will be 1 lakh 62,000, correct? 62,000 will be the total thing. So this 1,62,000 is my total eligible deduction. So I claim 1,62,000. So out of this 24,92,500, 24,92,500, you get 1,62,000 as thing. So you get 23,30,500. So this is not required. So rounding off is not there. So 23,30,500 will be your total, what you call your total income. So that's exercise 7. So if there are any doubts, you may just post it as query. In the meantime, we'll go on a break, a short 10-minute break, and come and solve the rest of the problem. So we'll take a short 10-minute break from now. So we are like what 8:30. So by a little before 8:40. So probably 10 minutes from now, we'll continue the class. So take a short break and come back. See you soon. Thank you. Yeah, yes. Yeah. So welcome back. So we'll start with the other problems. So in between, Pooja, there is no restriction on interest on house property for let out properties. The restriction that we are talking about is only with respect to the self-occupied properties. But however, the total loss from the entire head of house property can only be maximum up to 2 lakhs only can be adjusted with the other heads of income. So overall house property, the overall loss cannot exceed 2 lakhs in particular year. Anything above 2 lakhs can only be carried forward. So the maximum amount of house property loss that can be adjusted with the other heads of income is only 2 lakhs in one particular year. Subsequently, it only be carried forward. So to be very particular, there is no restriction on let out property, but house property as a whole still has a restriction of 2 lakhs. So that's it. So we'll start with the next problem. That is your exercise number 7. So exercise number 7 is basically compute the total income and tax liability. So if there is something like TDS or something, we are supposed to actually point it out. He's only age 31. He's from Delhi, both as per the regular version. And okay, we are supposed to calculate also under section 115 BAC. So we need to say whether he must opt 115 BAC. So they've given salary. Salary is given bonus, salary of servant, so provided by the employer, rent paid by Siddhant for his accommodation, so that's also there. Then bills paid by the employer for gas, electricity, and water provided free of cost of the above flat, so that's also there. Siddhant purchased a flat in the cooperative housing society in Delhi for 4,75,000 in April. So he has purchased it, which was financed by a loan from life insurance of 1.6 lakh at 15% interest. So it is being actually provided at 15% interest. So that also needs to be considered. His own savings 65,000 and a deposit from a national to whom this flat was given on lease for 10 years. So that's all there. Rent payable by bank was 3,500 per month. So that's what it is there. So he has given it on rent. So he has purchased a flat. He's paying house property. He's paying interest, housing loan interest. He is also collecting rental on that particular property. The following particulars are relevant. Municipal taxes is being given. So municipal taxes is given. So that is included. House insurance. So whatever is being insurance, is that relevant, not relevant? Not relevant. So though they use the word relevant here, not all the terms should actually be relevant. Why? Because only to the extent which is actually relevant for your computation is what you need to consider. These are relevant information, but not relevant for your income tax computation. So this house insurance, nothing needs to be done because you straight away claim 30% for everything. So the 30% in your house property is for the entire thing. You need not do anything separate. And there is a speculation business. There are two speculation business. In one, he is making profit. In another, he is making a loss. So he has also gifted 30,000 to his wife and 20,000 to his son, who was age 11. So he has gifted to them. The gifted amounts were advanced to Mr. Rajesh. So advanced Rajesh was receiving interest at 19% per annum. So we need to see whether clubbing applies because his money is given to his wife and son. That is immediately being given as a loan. So we need to see how does that work. Siddhant received a gift of 30,000 each from 4 friends. So what happens to your interest from friends? So that should be considered. And finally, he contributed 50,000 to public provident fund. So what are we going to do? So whatever it is, we need to understand each of this independently. So what we are going to do is in the read, whatever we read, we need to see what needs to be considered. So if you actually see, this will be included. This is part of salary. This is bonus is also part of salary. Salary to servant is actually a perquisite. So this also needs to be considered for perquisite by Siddhant for his accommodation. He himself is paying. No one else is paying. So you need to do nothing with this. So this is not applicable. And then bills paid by employer for gas, electricity. So whatever is free of cost becomes a perquisite. So this also needs to be considered. So these are all salary income. And then of course you need to provide standard deduction as part of salary. And when it comes to house property, The rental becomes your gross annual value. So this becomes your gross annual value. We need to do that. And then whatever is municipal tax we said is being paid should be reduced from your house property. House insurance, we said nothing needs to be considered. This needs to be adjusted. So whatever is there needs to be adjusted with the thing. Gift to wife. Gift to wife is actually a clubbing income. So we'll put a plus here. Siddhant received a gift. So this is also another sources. Contributed to public provident fund. It is eligible as deduction. And with respect to a housing loan, he has got an housing loan. So whatever interest it is being eligible, that is 15% on 1.6 lakhs is basically on eligible thing. So we'll put a minus here. So this house property can be claimed. So that's all about it. So with that, we will start with it. Only thing, we'll have to go one by one based on this. So first we'll compute salary. So we know what are the heads of income. So what we'll do is we'll do computation of who is that? What is the name? Siddhant of Miss Siddhant for assessment year 2022-23. Again, here also I left it. Computation of total income of Mr. Siddhant is what we need to do. So we need to first compute total income. So for that particulars, there will be one amount because we are just going to put the reference thing here. So we'll have income from salary, that will be 1. You also have income from house property, 2. Profit and gains from business or profession, we'll call it as 3. Income from other sources, so that will be 4. With this you get your gross total income. Then you get less deduction under chapter 6A. So that will be 5. And then you have net total income. Okay. So that's what you need to do. So we'll just have the columns for this. So this will be your total thing. So then you have amount. You have amount. Then you have reference. Yeah. So now we will start with each schedule. So note 1, income from salary. So particulars, amount, reference. So these are all mandatory columns. Sometimes it may not be of use also, but that's okay. When you have a standard format for each of the thing, it makes you, you need not think twice to see what is the structure. You will be very clear, okay, if I'm going to compute a head's income, I'll have 2 amount columns. So that's a basic thing that you understand. So we'll start with salary, whatever we saw. So the first is salary. That is your it said salary, and then so how much was that? 3,35,000. Bonus. So bonus is 11,000. Bonus is 11,000. Then perquisites. Servant. How much is that? 12,000, right? So servant is 12,000. And then bills paid by employer, right? Gas, electricity. Gas, electricity, and water. 11,000. So that is 23,000. What else is there? That's it, right? So 346, 366, 3,69,000. So you'll have to less standard deduction under section 16. So what does it say? 50,000. So your salary income is 3,19,000. So go to the top right here, 3,19,000. Next, come to, did you actually note the adjustments that you have for salary is very less? You need not probably think twice. There are only very few things that you need to actually calculate for salary because it is part of the overall computation. When you are actually computing only salary, there will be n number of items. You will have, as I told you, you will have gratuity, provident fund, pension, so many things to probably work on it. But when it comes to this overall computation, each heads only will have very few items to work on it. So that's the advantage of doing this computation, because in each head will be only tested to the basic level. Hardly you will have a very deeply tested provisions or something. These are all basic things. So now we'll move on to house property. Second is house property. So again we'll have particulars, amount and reference column, correct? So I will actually have gross annual value, less municipal tax, net annual value, less standard deduction under section 24A, loan interest under section 24B, correct? So this is what we need to consider. And then finally you get house property income. So I draw the column. See, I'm very particular about, I have a very clear idea on how many line items I need to work on because my formats are straightforward. I don't have any ifs and buts. So straightforward, when I know that I'm going to work on something called house property, this is what I will have my total income. So that's what it is all about, right? So I have a very fixed format for every item, which will help me in compute these formats without missing out anything. Right? So now we'll start with the problem. So gross annual value, the question said, we have computed this gross annual 3,500. So 3,500 is what we are talking about into 12. So that is 36 plus 6,000, 42,000. 42,000. Municipal tax was 4,300. So less 4,300. So net annual value is 42,000 minus 4,300. That is 37,700. And then you have to have 30 percentage of this. So that is 37,700 into 30 percentage. So that gives you 11,310. Then your interest is 15% on 1,60,000, correct? So 1,60,000 into 15%. So that gives you 24,000. So total deduction is 35,310. So 37,700 minus 35,310, 2,390. So your house property is 2,390. See, I'm not missing anything. Did you notice that there are very clear structure formats everywhere? So I fill up in one place, I go and fill it up on the top. So I get the total answer. So I'm not actually going to miss anything because everything is marked and being carried out in a manner in which it is effectively done. Okay. So now the third head is business or profession. So the thing is simple for business or profession. There are actually nothing in this. So we'll have a very simple thing. Correct. So you have income from one business. What business is that? 2,700 and lost 4,100. So we'll give income from speculation business is 2,700 less. We'll actually do it this manner. I'm sorry. 4,200, correct? So we'll loss from cotton business is 4,700, correct? 4,200 less profit from speculation business 2,700 carried forward loss 1,500, correct? Because the 1,500 can only be carried forward. It cannot be adjusted with any other business because it's speculation business. Loss from carried forward loss of speculation business. So it can only be carried forward. So the 1,500 is carried forward. So I go here, I write nil. Why? Because there is only a loss that is being carried forward. So that is there. Next, income from other sources. So 4. Income from other sources. I have particulars, amount and reference. So this is there, and then you have again another amount column, reference column. Okay. So for income from other sources, So now we have computed this thing. So he had gifted 30,000 to his wife and 20,000 to his minor children, and gifted amount was Rajesh. So the purpose of gifting itself is like loaning it only. So the interest that is being earned by them should be club, because that is not their money, it is them. So we have to calculate interest income, bracket we'll write clubbing. In bracket we'll write clubbing. So that is 50,000 into 50,000 into so it's basically 50,000 into 19%. So that gives you 9,500, correct? Less minor income. Minor income as an exemption under section 1032. So that is 1,500. So it will be like so it will be 8,000. So 8,000 becomes the income. So you can write it as one single line item, or preferably, since there is a deduction specifically for minor, you can split and write. First write about minor and then write about spouse also. So that is also okay. So now we have taken this and gift from 4 friends. Gift from friends, correct? So that is 1,20,000. So 1,20,000 is a gift from friend. Is there anything else? So we have considered gift also. So I guess that's all about other sources. So it is 1,28,000. So we will okay. So that's it. Okay. So now next is we'll have to go on right 1,28,000. So with that we get the gross total income. So that is how much? 3,19,000 plus 2,390 plus 1,28,000. 449,390. So now we'll have to calculate deduction under chapter 6A. So deduction under chapter 6A, what are there? Housing loan principal. Technically, we don't know what is there paid, so we cannot take that housing loan principal. Then you have contributed 50,000 to public provident fund. Is there any other D that we have written? No. So there is only one. So maybe, yeah, you can, since you have put note, you can just write here. Deposit under public provident fund is eligible for deduction under section 80C. So you can go and write the amount of 50,000. So it will be 3,99,000, right? 3,99,390. So that will be a net total income. Now we need to compute tax. So tax computation. So particulars. We'll have one amount column. I think that should be fine. So basically tax on total income. So that will be how much? Your income is 3,19,000. So 3,19,000 minus 2,50,000. So that will be what? 69, right? So that's what it is about. So you have 399, 390. So for 399, 390, you will have to calculate. So 3,99,390 minus 2,50,000 into 5%. So that's what it is about. So 1,49,390 into 5%. So that will be 7,470 less rebate under section 87A. You get the full thing as deduction. So tax payable will be nil. Correct? So that's it about it. Now what if it is computation of income under section 115 BAC. So with respect to particulars amount. So with respect to this, income from salary without standard deduction. Correct? So that's what you need to actually take. So without standard deduction, what was it there from 1? It is 3,69,000. So you take 3,69,000 and then house property income from house property. Income from house property, generally there's nothing that is not allowed. So only thing is, since it is let out, since it's a let out property, the interest on housing loan is allowed. Otherwise, if it's a self-occupied property, interest on housing loan is not allowed. So whatever you have actually calculated, this 2390 will automatically come. You can actually put that reference column here also, I'm sorry. So you can say 1 year, 2 year, because we have already computed. So you can continue to replace that. And of course, income for PGBP, that is business or profession, same thing applies. So there is nothing that needs to be considered. Then IFOs, in IFOs, the one thing is this minor exemption is not allowed. The 1,500 minor exemption is not allowed. So without minor child exemption, correct? So this will be nil. With respect to 4 minor children, it is 9,500. So 1,29,500. So that will be the income. And then since no deductions 6A is there, so you automatically calculate total income. So it is 3,69,000 plus 2,390 plus 129,500. So it will be 5,890. So as far as the tax for 5,890, it will be 2,50,000 into 5%, 890 into 10%. So this will be 12,500, and for 890 into 10%, it is 89. So 12,589. Adds this at 4%. So it will be 12,589 into 4%. So that is 504. So it will be 13,093. So we'll say since Mr. Siddhant is not liable to tax under normal provisions. The same may be adopted. Section 115 BAC is not beneficial to Mr. Siddhant. So you can write this. And say that he is not opting for it. So that's what it is. So there is nothing else about this problem. So that's all about this particular problem. Clear? So that is exercise number 7. Exercise 8. Exercise 8, again, as I told you, we'll straight away go to the end of the problem and see whether tax is there. Yeah, total income and tax payable, but anyways, they're not opting 115 BAC. So you'll have to see also if there is any TDS involved here. So the first is income from salary, basic salary that needs to be considered. DA should be considered. Commission as percentage of turnover of the company, 0.5%, that should be considered. Bonus should be considered. Gratuity. So for gratuity, we need to look, we'll put it as working. So where you need to actually calculate how much of gratuity is actually taxable. Own contribution to RPF, it is basically your ATC only. So we'll claim it as deduction. Employers to contribution, 20% of basic salary. So we need to do a working. Why? Because only 12% of basic salary is actually allowed. So we need to 12% of basic salary plus your dearness allowance and commission fixed as a percentage of turnover. So we will do that working. Interest credited to RPF account is 15%. So it is only allowed up to 12%. So the excess will actually be disallowed. So we need to do a working for this also. Gold ring worth of 1,000 was given, 10,000 was given to employee on 25th wedding anniversary. So it's basically a gift. So whatever it is with respect to this, it's like a perquisite. So since gift is more than this value, so we need to include this as a gift. Music system purchased on 1st April 2020 by the company was given to him for personal use. So this is also a perquisite. So we need to do this. 2 old light good vehicles owned by him were leased to a transport company against fixed charges of 6,500 per month. So what they are doing is they are actually doing light vehicles. So there is a section 44AE. So we'll put it as 44AE. So we need to include them part of that business. Clear? So that's what it is about. So and then you have received interest of 5,860 on bank FDRs on 24. So this is also there. See the word net and interest 6786 net from debentures of Indian. So you need to gross up and then provide TDS. So you need to include as income, also compute TDS. Made payment by check of 15,370 towards premium on LIC and 22,500. So these are deductions. 2 deductions are there. Invested in NSC, this is also a deduction. Donation institute approved. So this is also a deduction, 80G. So this is what it is about, right? All the problems that we are talking about. So now we will start working on it. So first thing is we need to compute what? Income from salaries. So computation of, who's that? Name Ramdin. Of Ramdin. Again, computation of total income. I don't know why I'm forgetting it every time. It's computation of total income of Mr. Ramdin. Maybe I'll write it actually. So of computation of total income of Ramdin for AY 2022-23. So you take particulars. This is summary thing. So one amount column is sufficient. You can have a reference column on. So basically you have income from salary, and then you add income from I guess there's nothing else, right? So income from salary alone is there. So apart from that, you add the PGBP, right? The vehicle thing. So PGBP, then you add income from other sources. That's it. So then you have gross total income. Then you have less deductions under chapter 6A. Then you have net total income. So on net total income, of course, you have to calculate the tax also. So whatever tax, so that's just the first table. So this is the first table, right? So we'll write it as 1, 2, 3. Chapter 6 says 4. Okay, so that's what it is about. Then tax. So it will be tax on total income, right? And then you'll have to check out what else will be there with respect to the income. So probably we'll have to see how much will be the income. Only then we'll know, right? So maybe we'll put it in the end. So we'll start with first salary. Income from salary. Particulars, amount, reference. Okay. So the first particulars is your basic salary. So you will have to calculate how much is salary. Basic salary is 15,000 per month. Basic. So it will be 1,80,000. So basic salary is 1,80,000. And then you have bonus, right? DNS allowance. So DNS allowance, you have 15%, that is 12,000. DA 12,000 into 12, 1,44,000. So that's there. Next is, so this is done, this is done. Commission. So commission is commission on turnover. So commission is basically 50 lakhs into 0.5%. So 50 lakhs into 0.5%. So that is 25,000. Next is bonus. Bonus is 50,000. So this is done. This is done. Next is gratuity. So for gratuity, typically we can put as a note. We need to do the working. So we'll write what else has to come. Then after that you have this PF contribution. So because it's 20% of salary, so you call it as employer's contribution, correct? So for that also you need to do a working. So we'll calculate that as 1.2, and then whatever is there, your employer contribution to PF needs working because it's only 12%. We are only trying to identify what are all the heads that has to come for salary. So this employer's contribution needs to be reworked. Then interest credited in RPF account. So that also is basically restricted. Interest on RPF. So we keep it as 1.3. Gold ring worth is a gift, right? So gold ring is basically a gift. There is only one check here because the gift basically says that up to 5,000 it is not taxable. So generally, anything above 5,000 is the entire amount is taxable. So that's what it is about. So however, you can also take a view that 5,000 is exempt, balance only is taxable. So probably whatever you're writing should be a note alone. So you write a note saying what exactly you're trying to mean by that. So notes to say that we are considering the entire amount as taxable since it has crossed 5,000. So gold ring, music system. So that is also there, right? So the music system, the asset that you're actually taking, is also the thing. So it's also a perquisite. So we'll say music system 1.5. So then what do you say? Music system. That's all. So everything else is relating not to salary. So with that, we'll have all things related to there. So you will have less standard deduction. So then salary income. So this is how we'll have to actually compute. Okay. So now we'll start with this 1.1. So gratuity, we'll have to see whether the employer is actually covered under this gratuity covered act or not. So it doesn't talk about anything, but it is being invested in recognized provident fund alone. So whatever it is there is should be considered. Now, whatever gratuity, what we are talking about is the question. The question, does it actually say that the gratuity that is being given to him, the gratuity 30,000, it doesn't say he has quit. So which means he's been receiving this amount during the tenure of the employment. So when it is during the tenure of employment, there is no relaxation. So what do you write for gratuity during tenure is fully taxable. So whatever you do here will be 30,000, that is completely taxable. Then 1.2. 1.2 is employer RPF. Okay. So basically, we'll write it as contribution. So contribution by the employer, it says 20% of basic salary. So whatever is 1,80,000, 1,80,000, 20% is being considered as your deposit. So which means 36,000. Less what is allowed is only your 12 percentage, right? So certain things, that is your DA, your salary, all this has to be computed. So what do you do? Less will compute an inner column. So salary will be taken. So salary will be taken. That is what 1,80,000. DA 50% only will be taken. So DA is actually 12,000. So we can only take 72,000. Then commission, as it is fixed percentage, you take that also. So the commission is 50 lakhs into 0.5%, which we have included here as 25,000. Correct? So 1,80,000 plus 72,000 plus 25,000. So 2,77,000. So in that, into 12 percentage. Into 12% is only allowed. So 2,77,000 into 12% is 33,240. So the difference is taxable. Taxable RPF. So will be 36,000 minus 33,240. So that will be 2,760. So RPF will be 2760. Then interest on RPF. Interest on RPF. Then interest on RPF, whatever they have received is 15,000. Received is 15,000 less excess over 9.5 percentage. So if 15,000, so the provision goes, if 15,000 is 15 percentage, how much is 9.5 percentage? Correct, okay? How much is 9.5 percentage? So that will be 9,905, right? So it will be 9,500. So the balance, that is your 5,500 only, will be taxable PF. So the 5,500, whatever is your recognized provident fund, will become taxable as this number, right? So you go to the top, write here as 5,500. Gold ring, you write it as 10,000. In the notes, you write saying that it is the view taken here is anything. If it crosses 5,000, the whole amount is taxable. So we need to convey that from the note. And then music system. So we need to value music system. So as far as the music system goes, what has been provided that it is 85,000 and it has been purchased on 1st April. So if it's assessee's own asset, for any other asset, it is 10%. So whatever it is, 10% of things. So it is 85,000 into 10%. So that is 8,500. So 8,500 will be considered as your this. So now what happens? We'll have to calculate 1,80,000 plus 1,44,000 plus 25,000 plus 50, 30, 2,760 plus 5,500 plus 18,500. So it is 455. So minus 50,000. So 4,05,760. So that's what will be considered as your income from salary. So 4,05,760, correct? And then you have PGBP. As far as PGBP goes, I'll just put it across here. Anyways, you'll have to do it in the note, but for just saving time, I'll just put it here. So we'll have to see how much per vehicle. So it is to hold light good vehicles. So when you say light good vehicles, it is owned by him or leased to a transport company against a fixed charge of 6,500. So it is 6,500 per month. Whatever is there, that is 7,500 per month. So he has actually been claiming the 6,500 as fixed charges. But if it's presumptive taxation, there is no charges. So straight away, what he needs to do is 7,500 per month, because he cannot claim lesser, even though he is only earning 6,500. As far as this less than 10 vehicle is based, 10 vehicle is there. If he is not maintaining books of account, it is mandatorily. So 7,500 into 2 into 12. So that's what it is. So it will be 1,80,000. So that's it is about. So next is we'll have to compute income from other sources. So that is let's say 3, income from other sources. Particulars amount. So here we've done this, we've done this, we've done this, done this, done this. Okay, received interest of 5,860. Is received interest of 5,860. So interest is 5,860. And then there's one more debenture interest or something, which is basically, he says he has received 6,786 is net. So we'll have to do a reworking, which is nothing but 6786 is after TDS of 10%. So divided by 90 into 100. So that's how you get this entire amount. So divided by 90 into 100. So 7,540. So this is the TDS alone needs to be considered. So there is no other income from other sources. So it will be income from other sources is 5,860 plus 7,540. So that is 13,400. So you go to the top, you write 13,400. So how much is your this income? Gross total income 405,760 plus 1,80,000 from business income plus 13,400. So 599,160. So in this, we calculate what are all the ATC. So we compute deductions. Again, particulars and amount. Okay, so first we start with, we had put D there. So contribution to own RPF. So you can say RPF, whatever that he has contributed is 30,000. So he has contributed 30,000. So this is considered now. Then, this is LIC is 15,370. So LIC 15,370. So that's there. Then ATD will come back later. NSC is 30,000 and FDR is 50,000. So NSC, FDR. So 30,000 and 50,000. So the total will be 60, 110 and 125, 370. So this is ATC. Then you have ATD, medical insurance premium, that is 22,500. So ATD will be 22,500. Then you have ATG. For ATG, what are they saying? ATG is saying 11,000 to an institution approved under section on to an institution approved. So it's an approved institution. Prime Minister National Relief Fund. So how does this Prime Minister National Relief Fund? We said there are 4 things that we need to consider. That is, whatever comes as your Prime Minister or Chief Minister, whatever, is generally 100% without limit. And then there are 4 things: the Nehru family, Jawaharlal Nehru, Rajiv Gandhi, Indira Gandhi, and all these things. If there is fund related to that, it is 50% without limit. And then you have 6 things where it is with limit on adjusted total income. So we need to find out the adjusted total income for that. So here for the ATG, what we'll do is, with respect to Prime Minister National Relief Fund, it is 100%. So how much have they deposited? They have deposited 5,100. So this 5,100 is the whole amount. So you take the whole amount. After this, let's say the other donation. For this other donation, you have to calculate the adjusted gross total income. Okay, so you have to calculate the adjusted total income. How do you get the adjusted total income? Compute your entire income, reduce all other deductions, but for this, and then calculate. So how much is this? The total income that we have so far have, the gross total income is how much? 599,160. So your adjusted total income will be 599,160 minus. You can take all other deductions apart from this. So far what we have, 125,370 minus 22,500. Sorry, plus 22,500. So you're eligible for 147,870. So far you have provided 147,870. So 599,160 minus 147,870. That is 451,290. So the maximum deposit that they can make is 10% of this adjusted total income. So it is like they can already make 45,129. So into 10%, 45,129. So now the actual deposit is only 11,000. So 11,000 or 45,129, whichever is lower. Of course, 11,000 is only lower. So we can take 11,000. So 10% adjusted total income or 11,000, whichever is lower. In this, you compute 50%, that is 5,500. So 80G put together is 10,600, correct? So in total, your 80C is totally 125,370 plus 22,500 plus 10,600. So your total is 158,470. So your 158,470 is your total income, correct? So now 599,160 minus 158,470. That is 440,690. Now tax on this. Tax on 440,690. So it is first 2.5 nil balance. For the balance it is, that is 440,690 minus 2,50,000 is balance 190,690 is 5%. So 190,690 into 5%. So that is 9,535. Correct? Since it's less than 5 lakhs, rebate under section 87A will be 9,535. So tax payable will be nil. So that's what you compute. Sorry, I forgot one more thing. So tax deductible is nil. However, we saw some TDS impacts, right? We saw the TDS impact. So while putting this, we said TDS needs to be considered because he has received this dividend interest in net. So that is 6786. We computed how much is actually your dividend income. That is 6786. We had computed this income from other sources as. So your income from other sources, whatever we computed, was basically 7,540. So the TDS in this will be into 10%, which will be 754. So in computing income, you'll say TDS 754. So refund will be 754. So that's how you do. So I had to hurry up considering the time also. So I hope it was all straightforward things only. The only thing is you should make sure if TDS is applicable, that needs to be considered. So now I'll see some of the problems and see how I can help you out in this. So for example, Akash, I'll answer questions for both the problems and then wind up. So Akash, how is minor income 1,500? We calculated 19% on that income. So for example, in the earlier problem, whatever income from other sources that we are talking about here is basically this income is based on 20,000 into 19%, 30,000 into 19%. So this is 3,800. This is 5,700. So that's how you get 9,500. In this 3,800, since it is minors income, there is a deduction, there is an exemption of 1,500 per children under section 10, clause 32. So that's why we have reduced this 1,500. Cushy speculative business. See, basically, speculative business is a business where it is from specific income, which is like your gambling, betting, anything which is based on luck or something. So that is called speculative because it is not purely by your brilliance. There is some speculation involved. That is, there is some uncertainty involved. So that income, that loss from that business cannot be adjusted with loss from regular business. But in the sum, what we saw was both the business was speculative. Cotton, speculative business, other speculative business. So we adjusted between the speculative business. The balance business loss cannot be adjusted with any other heads of income. So we have carried it forward. So I guess I've answered this 1,500 for this exemption. Now, see, we have now been working on all these problems and other things. So what I would like to tell you is, one is just understand the provisions. Whenever you're reading the question, please, while reading itself, see what you need to adjust, how you need to adjust, what is the section that is applicable. So what happens is, basically, when you're solving this problem in the method that we said, read, prepare, and solve. Correct? When you're reading, try to link with provisions. Which provision is applicable on all those things? Relevant keywords. Identify relevant keywords. So with which you will know that what needs to be done. So that is what is very important. So by what to do. For example, we saw gratuity now. Generally, when we see gratuity, we think we need to work something for gratuity. But then if you actually realize, nowhere in the problem he says he has quit. He is actually currently worked there. So you tend to start working for the gratuity provision with which, the 1/3 or 2/3, and you start working on it. But if you actually see, the question is about current employment. He is working while he is receiving gratuity, which is actually taxable. Gratuity only during retirement is actually exempt. So that's where it is important. So you must give importance to these two things. That is, when you're reading, you should identify the provision and identify the relevant keywords, which becomes important to link it with the provision. So this becomes very important. And then, as I told you, small marking. I am stressing the small marking because actually markings are not allowed in an exam paper. So with the pencil, a small mark is kind of okay. Just to say what needs to be done. Should it be deducted? Should it be added? Should it be allowed, disallowed? What exactly? Do you need to give a detailed working? So probably try to mark it in a small manner to see how it goes. And then start solving. And on top of it, of all of this, when you're actually studying, considering that you have few more months for examination, it is always good to know the entire subject as a whole. There is nothing wrong. The entire book, the entire thing you need to understand. But for examination perspective, try to understand what is actually important for your examination. What is actually important for your examination. So when it comes to examination, for PGBP, you will be tested very little because PGBP is primarily for your final. Similarly, TDS, very limited. So probably certain sections like 194, 194C, 194J, and 194K. So this is all you need to know. Did you see in all the problems that have been worked out today, and even in the last class, it is only about this dividend in TDS that you are supposed to know. The crossword or stress, that is 30% that you need to know. So if you actually look at it, the number of TDS sections you are tested is very few, maximum 5 sections, not more than that. That too, very basic. You only need to know the rate. You need not know anything beyond that. So these are basic things that are being tested. So don't go overboard. Don't try to understand each and everything in the book or something. So try to restrict to the extent which is actually very critical for your examination. I'm trying to tell you only for the purpose of examination. It is always good to know the entire syllabus. But when it comes to examination, if you are trying to focus more on what is actually relevant and important for an examination, it becomes critical. It will help you a lot. It will save you a lot of time. So that's one thing probably which I would like to tell you. So with all of this, I'm sure all of you will crack the examination in as easy as possible. And I'm sure all of you will come out, clear the examination, and you'll do a great, your results will be great if you're focusing on particularly with respect to your examination perspective. So I'm sure all of you will do great and pass out this time in November examination. Wishing you all the best for your examination. With this, I'll wind up the session. The direct tax itself gets over by this. So wishing you all the best, and I would please focus more on examination and make sure that you're writing it well. Thank you all for the wonderful sessions. Thank you.